Hello again, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region, here to give you my professional and honest opinion on the Canadian housing market, 2022 Canadian housing market. The background this week, or the thumbnail, I can't decide which I'm going to use it for. I'm probably going to use it for the background, is brought to you from my 9-year-old daughter. Her YouTube channel name is here. I don't know, kids understand it, I don't, but it's some gotcha life stuff. Anyway, got a bunch of things to talk about this week, including the national statistics from CREA, which again are pretty interesting. So let's get into this. And I want to start off by recapping last week with buying opportunity or buying times. Someone suggested I should try to put them all together in a graph, which I did do. It's partial data from certain years. So here it is. I'm not going to spend too much time on it. Just wanted to show you. So starting from the left, you have just in the early 80s, of course, high unemployment in the dark blue, high fixed 5-year mortgage rates. They went high and they started to drop. And of course, the light blue kind of wavy line is the historical Canadian price index. There's no average price. If someone can find me an average price, please let me know. That goes back that far, but there is no data in Canada. And of course, if you go on to the early 90s, same thing. And then I'm going to jump ahead to, let's go to 2002 area, because we have almost all indicators there. We have high unemployment, high mortgage arrears, the 5-year fixed mortgage rate is starting to drop. And of course, there was no major uptick in the house prices, but it was a good time to buy. Now we get to between the 2002, 2013, so this would be the 2008 financial crisis. Of course, you can see we have all data sets here, and it was around 2009, 2010 was the buying opportunity when prices dropped. On the top little graph, that's the CREA average price that you'll see in many of my videos. So of course, you see after 2008, it did drop. I think that was 09 or 2010, and that was when unemployment rate was high, the mortgage arrears were high, and of course, the 5-year fixed mortgage rate did go from a higher point to a lower point at that time. And you could argue that there was a little buying opportunity a couple times after that in 2017 or so, 2016, 2017, depending on when you look. And of course, you could even argue that the beginning of the pandemic was a buying opportunity. But that was a pretty odd situation. But if you had bought then, it would have been a great time to jump in. All the indicators lined up. But we're heading for our next one. They're not even close, most of the indicators, so keep an eye on it. We need those all to line up. Again, that is high unemployment, high mortgage arrears, mortgage rates that go from a high point to a low point, and of course prices that are at a lower point too. Just wanted to also bring up the mortgage rates. I haven't touched on them in a while. I usually do my rate hub thing. So here's the mortgage rates. Of course, the variable rates are all sitting between 4.25% and 4.5%, and the fixed rates on the right there, they are 5.25% to 5.5%. One thing that people bring up, like they're tied to the bond yields, the 10-year bond yield in Canada. Why haven't they dropped? Because the 10-year bond yield has dropped. And of course, when the bond yields are going up, the banks price it into the mortgage rates. But when the bond yields go down, it's like they take their time pricing it back in. And if anyone has any input on that, let me know. But I did just want to touch on a news article from Reuters. Bank of Canada's soft landing scenario hits the rocks in the bond market. Canada's inverted yield curve is signaling the Bank of Canada may raise interest rates to a level that triggers a recession, placing the central bank in a tough spot as it aims to tame high inflation and engineer a soft landing for the economy. The yield on the Canadian 10-year government bond has fallen some 50 basis points below the 2-year yield. That's the biggest inversion of Canada's yield curve in Reuters data going back to 1994, and deeper than the U.S. Treasury yield curve inversion. Obviously, they're not in sync with Canada or the Bank of Canada's soft landing approach, saying it's probably going to trigger a recession. But anyway, we'll see. It's a balancing act, but interesting article. All right, on to the national statistics from CREA. Canadian home sales slow further in July. Statistics released today by the Canadian Real Estate Association show national home sales slowed further in July 2022. And the highlights: National home sales fell by 5.3% on a month-over-month basis in July. Actual, not seasonally adjusted, monthly activity came in 29.3% below July 2021. The number of newly listed properties dropped by 5.3% month over month. So it's interesting. The sales came in 5.3 and the listings are lower at 5.3. So we're having lower sales but lower listings. We always had a listing problem, right? We don't have enough listings, we don't have enough inventory, but it doesn't matter because sales are slowing anyway. But that could be a good thing, a bad thing, depending on your situation. But I thought that was a pretty interesting statistic. The MLS Home Price Index, HPI, edged down 1.7% month over month, but was still up 10.9% year over year. The actual, not seasonally adjusted national average sale price posted a 5% year over year decline in July. So I want to go back to the second from the bottom. The MLS Home Price Index, HPI, edged down 1.7% month over month, but was still up 10.9% year over year. It's an edging down at 1.7%, right? It's just the wording. So let's see, does it edge up when it goes up 1.7%? So I look back and I got some information, and this is the Canadian Real Estate Association's October 15th, 2021 release for the month of September. And here you'll see highlighted, the MLS Home Price Index, MLS HPI, rose 1.7% month over month and was up 21.5% year over year. Anyway, I thought it was interesting that the wording they use, edging down, but it just goes up. There's no edging up. Home sales recorded over a Canadian MLS system fell 5.3% between June and July 2022. While this was the fifth consecutive month-over-month decline in housing activity, it was also the smallest of the five, and the chart down below shows it. Home sales can only decline at a certain level for so long, right? Like just because home sales stop declining, the number of home sales doesn't mean the market's rebounding. So let's say they stopped. Let's say they didn't decline any further. They're still below the 10-year moving average, right? I expect home sale declines, not price declines, home sale declines to slow down or to almost stop at some point. Like we're almost at the bottom of the number of sales that can happen, in my opinion. Sales were down in about 3/4 of all local markets, led by Greater Toronto Area, Greater Vancouver Area, and the Fraser Valley, Calgary, and Edmonton. Major populated areas were all down, except for Montreal, which is another big one. We got the buyers versus the sellers, right? And this was very well written, this part, and I have to agree with them. This is what's happening in the market, hence my thumbnail or my background. And let's read what it says. This was from Jill Udil. She's the chair of CREA. The demand that was so strong just a few months ago has not gone away, but some buyers will likely stay on the sidelines until they see what happens with borrowing costs and prices. As they re-enter the market, they'll find a bit more selection, but not as much as might be expected. And of course, the chief economist at CREA, Cathcart, one new piece of the puzzle was the decline in new listings in July. It was of the same magnitude as the decline in sales, and in many of the same parts of the country, said Sean Cathcart, CREA senior economist. It's only 1 month of data at this point, but it suggests that some sellers are also playing the waiting game, and that is with an overall inventory of homes for sale that is still historically low. So I'll get back to this after I'm done the statistics. Regionally, most of the monthly declines in recent months have been in markets across Ontario and to lesser extent in British Columbia. Prices continue to be more or less flat across the prairies, while only now showing small signs of dipping in Quebec. On the East Coast, prices are mostly continuing to rise, albeit at a much slower pace. The exception is relatively more expensive Halifax, Dartmouth, where prices have dipped slightly. The actual national average home price was $629,971 in July 2022, down 5% from the same month last year. The national average price is heavily influenced by sales in Greater Vancouver and the GTA, two of Canada's most active and expensive housing markets. Excluding these two markets from the calculation cuts $104,000 from the national average price. But if you exclude GTA and Greater Vancouver, it's not a national average price anymore. Anyway, let's continue. Just as these two markets impact the national average, market conditions can also skew the measure. For example, Rapidly rising borrowing costs disproportionately curb sales in more expensive markets and market segments. This can result in a statistical phenomenon known as the Simpson's paradox, where the change in the composition of national sales can cause the national average price to overstate the downward pressure on actual prices. This explains how the national average price is down 5% year over year in July, despite average prices being down just 0.4% in Ontario and still up in every other province. So yeah, he's trying to explain, which is a good point. So I'm going to show you a graph here. This is from CREA also. What he's saying is that Canada has a 5% decline year over year for July. Everywhere is up except for Ontario, which is 0.4. So how are we down 5%? Well, it's because the ones that are down, Ontario and BC, the most expensive markets and the most expensive price points, have come down, driving the overall national average down, but the less expensive provinces haven't had the declines. So it's this phenomenon known as Simpson's paradox. It's almost like two ways of looking at data. So yeah, very interesting phenomenon. Good that he touched on it and made sense of it. But yeah, look that up and it does make sense. And briefly, here's some more CREA statistics. So this is the sales activity. I think they've averaged out the Qs so that you can see it in comparison to July. So our sales activity is down. That small one there is obviously the pandemic, which we can't really include. It's not normal. But we're almost at a 5-year low. And it looked like Q1 2019 was a little bit lower. But yeah, like I said, I don't expect sales activity to drop much further. Prices will, but I don't expect sales activity to. And here's new listings. So even though the listings are down, we still have lots of new listings in comparison to the last 5 years. The aggregate composite MLS HPI year over year change percentage. So we will obviously be going underneath that zero line, just like in 2009 and 2018, 2019. And I think we're going to see some pretty big dips underneath it, even if the prices stayed where they are, which they're not going to, but even if they just maintain this level, we would see huge dips underneath that line in the coming months. This one was pretty interesting. The months of inventory compared to the sales to new listings ratio. It looks like we're at 5-year low for sales to new listings. Looks like it might be starting to level off, and the months of inventory is rising. It looks like it's consistently rising. I expect it to keep rising. Inventory will come on the market, but again, it goes back to that buyer and seller resistance. Here is the updated average sale price in Canada, with the HPI line obviously in there. And you can see I put that green mean line in there because I talk about mean reversion sometimes. So for the national mean reversion, it looks like we're heading towards it. It's not like we're just going to hit that line and stop. We will probably go under that line because, again, this is a mean reversion, so we can go way under it just like we went way above it. But we're quickly headed towards the mid 500s. We're at 629, 900 right now, so we'll get there, looks like very soon, in the next couple, 2-3 months. This was interesting. Usually when I touch on these once a month, I don't make my own charts because CREA produces them and they're not right on the main page of their news release. You have to look through the menus or go back through statistics and find them. I could not find this anywhere on their site. I don't know if they removed it just for this month or if I just couldn't find it. If anyone can find it, please let me know. I've added onto it. So this was last month's, talking about June at the top, 665,000. Now I added July because, again, there wasn't an updated one on the CREA website. I don't know if this happens once in a while or if they chose to remove it for some reason. But again, I made my own down there where it says minus 5%. That's the 5% decline month over month, or year over year, I should say. Again, just like I did last month, we're 5.4% month over month. So that month over month from June to July this year, and 22.9% from the February peak. That's $187,000. The average house in Canada went down from the peak. Pretty big numbers. Looks like we're quickly approaching that 30%, which a lot of people talk about. I think that we're going to go past it, in my opinion. So yeah, I wanted to talk now about what do I see on the ground, I guess, in the last week or so. And I do see that back to that buyer versus seller. I see the buyers that have waited on the sidelines, they're getting antsy. They've seen their prices drop, whether they want to look at what's going to happen. And who knows, they could be right. Maybe prices are going to go back up, but there's nothing to support them going back up at this point. Interest rates are still rising. There's nothing to support them except insanity. I'm not talking about the people, but the prices, right? And of course, when we have the sellers are saying, I'm not going to sell my house. I don't need to sell it. I'm just going to rent it out. I'm not getting what I want. So we're seeing resistance from both sides. A lot of the buyers, as the CREA release said, a lot of the buyers are sitting here and they were waiting on the sidelines. Some of them did jump in. Maybe that was the right option for them. I don't know. I can't say. So we have buyers sitting on the sidelines, waiting it out, and now the sellers are starting to sit on the sidelines. So again, the resistance from the sellers. So it's going to be this standoff for some of the sellers and some of the buyers, not all of them, and we'll see what happens. The problem is, on the way up, everything was in favor of the sellers. The low interest rates, the competition, the lack of supply. Now, everything's in favor of the buyers. The higher interest rates for now, the increasing months of inventory. So it looks like the buyers are going to win this battle, but the sellers are putting up some resistance. But sooner or later, that's, again, going back to that stages of the bubble graph, they're still in the denial stage. And once the fear sets in, which will happen at some point, that's when that resistance will ease and there'll be more inventory on the market. So again, still early stages, as most of you know, you comment on it. I just wanted to show you a couple of updated graphs. So as we were going up from 2020, we'd go up and we'd level off, we'd go up, we'd level off, and we'd go up. And of course, now we started coming down. So now you can see we've come down. I think you're going to see a little slowing in the price declines, maybe in the next couple of months. One of two things are going to happen. Things will keep declining, maybe not at the pace they were at, because that was pretty aggressive, but they're going to keep declining very significantly. Or we're going to hit some support, just like we did on the way up. We hit resistance, and you're going to see it go down. So we're going to go down in steps, like we went up in steps. And also my Fibonacci retracement that I did a couple months ago, I've added the new price movement onto the graph in the red, well, the average price line there. And you can see we're broke right through the 38.2, which is a major level, and we're headed towards the 50. I think we're going to go right past that, and again back to the mean line. The mean line, it's far down there, right? It's below 600,000. Now this was the Ontario numbers. National will be more of a consistent trend line down, but it was interesting just to revisit this, and I'm going to bring this up every month or two just to see where we're at. I just wanted to finish by saying, I love reading the comments, the good, the bad, the questions. I try to answer the questions. And I think next week, I can't promise, but I think I'll, read some of them on the video just to, engage the audience more. And so maybe the top comments or questions, I'll try to answer them or respond, or just even to give my feedback on ones that caught my attention, because there's some pretty smart people out there that watch these videos, and other people that need advice. So again, might not be just questions, could be comments. So until next week, thanks again for watching, and I'll see you then.